You're watching Beyond Market. Welcome, I'm Esther, Awoniyi. Many thanks for joining us. On the show today, we'll discuss Nigeria's recent insurance recapitalization. As always, you can join a conversation with the hashtag Beyond Market, and you can follow my Twitter handle too at Esther O. Awoniyi. Now, the National Insurance Commission has raised the capital base for insurance companies in Nigeria. Now, the risk-based recapitalization of insurance companies is set to commence on the 1st of January 2019. Rotimi Okpaise, partner and Actuarial Lead for Ernst & Young West Africa, joined us to better understand the recapitalization move. Take a look.
The industry has not grown as we would have loved it to. Penetration levels are still under 0.5%, and they've more or less persistently been like that over the at that level over the decade. On the individual, which is the retail level, which is individual insurance, it's been pretty low. But there have been some low hanging fruits given the industry, which has assisted it to grow a bit. On the life side, one is a group life business, which is employers of business have to insure their employees. So that's helped the insurance industry. Also, the Pension Act came at about 2004. It really kicked in a few years after that. And the insurance industry have been allowed to underwrite what we call annuity business, which is when you retire, you buy a product from an insurance industry which pays you income over your lifetime. And that's taken off quite a bit in the insurance market, and that's helped boost the size of the insurance market.
But you mentioned penetration levels, and,
yes.
and I keep wondering, year in, year out, we keep the numbers are slowly climbing. There's no traction, and I'm wondering why is it? Because I know that on the part of NICOM, the regulator, and even the players themselves, they embark on awareness campaigns. You hear the radio jingles, you see the TV commercials, you see some of them out on the streets, but they still haven't been able to move the needle where awareness is concerned. What is the problem?
On a high level, I would say there are two issues to look at. One is that the bulk of the population is actually not too rich, not savvy, or the investment matters. And so you have to look at microinsurance to attend to that part of the society. That's a business which the insurance industry has really only recently adopted. So with regards to the micro level, I expect that maybe over the next few years there will be more traction to talk about there. The other bit is, and this is my view, I don't think there has been enough awareness campaigns and enough interaction with the populace with regards to insurance matters. I don't think the average maybe mid-30s, maybe graduate marrying knows about insurance around when he marries. I doubt if families really know much about insurance and what insurance can do to them. Insurance is a very good social financial tool, and this is my view. I don't think the level of awareness and the level of engagement of the insurance industry with the populace is as high as it should be, and that could well be because of lack of capital.
I was going to come to that. Do you think that it's maybe not a willingness to spend, but maybe they just cannot carve out the amount of cash needed to invest in awareness?
In part, I think so. I think so, because it really, I would call it almost a laboratory. It's more or less research. You really need to allocate some money for marketing purposes and really engage a populace. You may win, you may not win, but you need to have some money to allocate to that on a regular basis. Just like maybe the big industries have product and development kind of budgets. Insurance
so
companies
money going
also,
into research into seeing, okay, what are those projects or products rather that we can develop to suit this category of people, of customers.
Yes.
So looking at across the landscape, we still have, and I know that NICOM over the years has tried to reduce the number of insurance companies, just to make them maybe have fewer but stronger players in the industry, because I mean they feel that that is the best way to go. Instead of having so many weak, why not just have a couple of them that are strong and can underwrite big ticket? But do you think that has helped in a way?
That's NICOM's.
Ensuring that we don't have too many. I think there were 27 of them right now, but we had more before now, and
I think it has helped. It has helped because, especially because we haven't had that traction within the industry. We need to encourage economies of scale, because also there are few. It's a technical issue. There are also not too many technical people, so we need to consolidate that which we have and use that to grow the industry. So
even then, at that, I mean, we have a population of 180, 190 million. Even if we have 27, I'm thinking to myself, for a country with this kind of population, would that be enough in the first place? Even though they're fewer and stronger compared to what we had before.
Yes, I think so. I think. Especially with what I said about the micro level, the bulk of those numbers are really almost below the line in terms of income levels, and so we need special insurance companies which are on a smaller scale, which can engage with our communities in the villages, for instance, and that's where the bulk of the population you mentioned resides.
What is your perspective on the product offering in the market right now? You look across the landscape and you look at the quality of the products or the type of products and those that are, were meant to be tailor-made for certain customers and clients. Yes. What do you make of those kind of products?
Well, I think they're in essence standard products, which to a large extent applies across the world, really. We have basic insurance products right now. We're talking of retail to a large extent. And there is an increasing need and will from the insurance industry to try to tailor-make those kind of the products we have. For instance, the kind of products you sell to an Okada community may well differ from the kind of products you would sell to market women. And so you really need to move a bit more into those clusters and try to understand their needs better. Rather than sell just life assurance products, you could, for instance, with the Okada people sell life and accident products. With the market women, you may sell life and fire. So it's that kind of mix, and you could also attach health to both of them. That's the kind of thinking that's going within the industry right now.
Okay, well, would you say that in terms of from an innovation perspective, would you say that we're seeing enough of that in the industry? Are they really very innovative?
We haven't, but I must also say that the industry has now, in my experience, the appetite for innovation has never been higher than now. So I think we will see innovation as we go along.
Okay, now the regulator has decided to up the capital base of the players from 2 billion to 6 billion, and it's in 3 phases for the Tier 1, Tier 3, Tier 2, and Tier 3. Yes. Help us break it down. Help us understand this new directive.
Yes. Presently, the minimum capital for the insurance industry is 2 billion for life and 3 billion for non-life.
Okay.
The regulator has said we'll call that Tier 3. It's now said also that I'm going to put you, just as you mentioned, I'm going to put you into 3 cohorts, 1, 2, 3. If you do Tier 3, you can underwrite some basic insurances. For instance, you can do motor insurance if you're a Tier 3. You can sell endowment products, retail products, if you're a Tier 3. You're just a basic insurer. Now your capital needs to go up 50%, from 2 billion to 3 billion, and from 3 billion to 4.5 billion for the general insurers, for you to be a Tier 2. Okay. The Tier 2 products can do everything the Tier 3 companies, Tier 2 companies can do everything the Tier 3 companies do. But in life assurance, they could also do what we call group life assurance, which is the employer insuring the employees. And that's a low-hanging fruit. With the general insurance companies, the tier 2 companies can do marine insurance, they can do credit insurance. Those two are very, very linked to the economy, and they're low-hanging fruits also. Then the final tier, which is the tier 1, it's a sizable jump from the tier 2. Tier 1 company has to have 6 billion if it's life. So that increases to 200%.
Wow.
Rather than the 50% of tier 2. It's 200%. And for that you can do everything tier 1, tier 3 and tier 2 can do, plus annuity business. Whereas under the general type of insurers, you could do everything 3 and 2 can do, plus oil and gas and aviation. And for those tier 1, you need 6 billion on life and 9 billion for general business.
So 2 billion to 6 billion, that on the face of it looks like a stretch, and there have been mixed reactions. I've heard several analysts talk about how they foresee some of the players struggling to get up to raise that 6 billion, even the tier 2 and the tier 3s themselves. But what were your first thoughts when you heard about that jump, 2 billion to 6 billion?
Yeah. I'll also put it in the context that that jump has to be between now and the end of the year. So we just have 6 months to implement that jump. My first thoughts were, yes, it is a sizable jump, but it's something we knew it would happen. So it's not a complete surprise. The amount, the extent of the jump maybe where it's a bit higher than maybe than one expected.
You expected that probably would have been in phases, maybe from a 2 to a 4, and then for a 4, from a 4 to a 6.
No, not necessarily, because there's also something which we call risk-based capital, which is really where the regulator is going, which is the capital you have should really reflect the risk you underwrite. It's a worldwide concept, and we do know that if you write some levels of business, you really are exposed to risk should in case things go wrong.
That was Rotimi Okpaise, partner and actuarial lead for Ernst & Young West Africa. We'll continue with the discussion right after the break. To join us again. Welcome back to Beyond Markets. We're continuing our discussion on Nigeria's insurance recapitalization with Rotimi Okpaise, partner and actuarial lead for Ernst & Young West Africa.
Just to put it in context, we actually surveyed 20 companies. Of those 20 companies, 3 had 6 billion and above.
Already?
Already.
Okay.
So 17 did not. So that gives you the scale of the issue. Not all will be able to raise that money, and I think quite a number would choose not to.
Really?
Yes, will choose not to. Mainly because, I mean, the 6 billion you referred to really relates to life insurance. And what you are exposed to, what you're exposed to or capable of writing if you have 6 billion and above is everything plus annuity business. I do know from my consultancy experience that quite a number of clients have already told me, I don't want to go into this business. So I think for life companies, I will expect the bulk, not all, the bulk of them, maybe 60% or so, to be happy to be in tier 2. But for those who want to be in tier 1, which is really your question, not all will be able to raise that money. Money is not really, the insurance industry itself has not necessarily attracted capital.
Why is that so? Because I was going to ask that question.
Yes.
That, okay, for those who decided, in the tier 1s who decided one annuity and we want to raise the 6 billion, does that open up a good opportunity for them to look outside and try to attract private investors or even foreign investors?
Yes, that's right. It does, and you know, I do also know that there's talks also from abroad, the foreigners wanting to come in, you know, those who are around 4.55 want to go to 6. So there is talks of mergers and acquisition, and there is talks of you know, external capital coming in to the industry. So I see capital being available, but there just may be a bit of a stretch to get it. That's the point I was really trying to get at. And obviously, the performance will have to change moving forward, because a key issue now would also be return on capital. And I think so management will be stretched moving forward.
Do you think they'll be able to meet, I mean, there's a deadline. Do you think they'll be able to meet the deadline?
I think
the regulator may need to shift.
I think it would be a bit of a struggle meeting the deadline. Depends on the percentage really that really wants to make that tier one skill. It will be a bit of a struggle. The regulator, I don't know, they may shift a bit. I really don't know yet. It depends on...
But what do you foresee as a likely scenario?
From the regulators? Or, well, I foresee a likely scenario...
For the tier ones especially, to raise it to 6 billion.
Yeah, I see a bit of mergers. I see more mergers than raising of capital.
Do you think players right now in the industry will be willing to merge?
Yeah.
Or do you think the regulator may say, you know, may actually have to come out and say, you know what, I think then you guys need to merge?
I think circumstances would lead to mergers. So the regulator may, I'm not sure, they may come out, they may not come out to say that, but I think circumstances will lead to mergers. For the simple reason that I think the terrain has changed with this law. And by that, what do I mean by that? There will be more aggressiveness moving forward within the insurance industry. And if
when you say moving forward, are you talking about progressing?
Yeah, progressing.
Okay.
Yeah, I'm talking of progressing. Okay. Yes, and I'm talking post for January 2019.
That is, if hypothetically speaking now.
Yes.
Where the players are able to raise, for those who are interested, especially in the tier 1 category, to raise the 6 billion.
Yes.
And let's say everybody somehow manages to fall in, you know, into one of those 3 categories.
Yes. It would be a big game changer. Not so much, and I'll tell you why. There are going to be a few things that will happen. The first is that there is going to be a broader management coming into the industry. The owners of capital will bring their own reps in. And what I foresee from interactions is that there's going to be a huge amount of digitalization within the industry over maybe the next 3 years. Digital is really going to move insurance. And digital is going to ensure that that penetration level that we've been talking about is enhanced.
We're seeing companies in other sectors.
Yes.
We're seeing what technology is doing for the companies in other sectors. And I'm wondering, why haven't we seen that happening in the insurance sector?
Yeah,
that would have been like a low-hanging fruit, like you said.
Yes. There's been a bit of, we've been slow. The insurance industry has been slow embracing digital. But that, I think it's already happening.
Was it lack of cash to invest in digital?
In part, lack of cash. I say in part. I think lack of cash. And I think there may be also a lack of proactiveness within the industry. And I think proactivity would really be the theme of the industry. Certainly those in Tier 2, Tier 3 over the next few years. From my interaction with entities within that phase, I think there is that feeling of we need to march on. We really need to do something.
And
we need to make a change. If we're going
to march on, a big part of that marching on would involve getting more capital.
Yeah, capital.
Having a better, bigger war chest, as it were. Do you think that could, if that happens, hypothetically speaking now,
yes.
Do you think that the offerings, the products and services would change dramatically?
Absolutely, absolutely. One key thing that will happen is that there's going to be a higher level of interaction between insurers and their customers. They're going to know what their customers need, and they're going to tweak their products to meet the needs of customers.
Because now they will have more money.
Yeah, they'll have more money. Yeah, that's right. Yes, right.
Okay, so if we end up with fewer players, if
yes.
we do see some mergers or acquisitions and we end up with fewer players,
yes.
would that be a problem?
No.
I mean, if we're coming from, 41 general, do you think, would that be a problem?
I don't think so, not in the immediate. And as we, as we track success, new players will come into the market. They will just come in with more capital. The regulator is not saying, I'm not issuing certificates to people who want to come in with capital. Once there's that traction will attract more players.
Okay.
So I don't see it as a problem.
So have you done a projection in terms of how perhaps the annual growth that we could see if we do see these players fall into one of those three categories and then the industry moving on? Would you have a new revise your projection for annual growth for the industry?
Yeah, we actually don't have a projection. We haven't done that survey just because this real issue is about 2 weeks old or so. We haven't. But in the past, what we've been focusing on is if life insurance is really 0.1% penetration, what does it take to move to say 0.3? And that is 3 times. It's a sizable multiple. What does it take to move to 0.5? And kind of the things we have looked at are some of the things we've talked about here. One is awareness, a higher contact with policyholders. And what would do that? Digital. Digital would really, if digital is available, the level of awareness would significantly increase. You can also meet with people through a platform to know what their needs are, and you can design products for that. And once you start meeting the needs of people and you make people aware that you're doing that, you'll be more successful, and that's what's not happening right now.
Okay, so if you look at the Nigerian markets, are there any markets that are similar to ours? Maybe have similar economy, but similar challenges, similar challenges along the lines of especially penetration, and maybe an inadequate deployment of technology to drive the sector? Or maybe some lessons we can learn from those countries?
Thank you. Certainly Kenya Insurance has, mobile insurance through the mobile phones. It followed money transfer. As you probably know, money transfer is also popular in Kenya. Insurance also followed that. In Ghana also there was a sizable amount of success. South Africa has a reasonable amount of success in that. And those are territories that I'm aware that technology has helped trigger the performance of insurance, and especially on the retail, even on the corporate side.
So now we should expect these companies to make more investments in technology.
Absolutely.
Because I'm just wondering to myself, would the banks have done it?
Yes.
You can do all kinds of things, pay your bills, do all kinds of things even on your mobile phone.
Yeah,
I'm thinking, why can't insurance follow suit?
Yes. There really is no logical reason why not that I can think of. But I also do know that the insurance industry is quite actively thinking of doing those. Irrespective of the regulations which have just come out, I know the insurance industry is actually thinking to move into that terrain, and I'm sure they would in the next few months.
What about regulation? How the environment has been regulated in the last 10 years? I know that because from what I've learned, when I talk insurance with guests, is NICOM always wanting to, obviously ensuring that there's fair play and that players are able to have the capacity to do the business that they do, but just ensuring that there is depth in the market, but we still don't have that. So but for you, how would you describe the regulator and how it has regulated the market?
I think it's done reasonably well. And I do know the regulator is also trying to embrace technology a bit more to face the new challenges which we do have, and also be ahead of the curve rather than waiting for reports to get to it after events. So I think the regulator, in my view, is stepping up, and I think they can only improve and get better.
So in the next 5-10 years, what do you foresee for the insurance sector in terms of growth?
In terms of growth, I foresee a deeper penetration
You think we'll be able to move the needle on the awareness
We
issue
will,
now
we
that
will
there's
do.
more happening?
I'm confident
Okay.
about that. I'm confident about that.
So what kind of growth should we expect?
In terms of percentages, again, it's difficult to say, but I'll rather say I have a target.
Okay.
And I'll say maybe in the next 5 years, for the penetration level to reach close to 1%.
1%.
1%, and that's 10 times.
That was Rotimi Okpaise, partner and Actuarial Lead for Ernst & Young West Africa. With that said, on Beyond Markets, thank you so much for being a part of it. Remember, you can watch all previous episodes of the show on our website at cnbcafrica.com. You can also stay engaged with the hashtag Beyond Markets, and you can follow my Twitter handle too at Esther Awoniyi. From myself and the rest of the team, thank you for watching and have a good day.